Hi, welcome to the Market Alert for Friday, the 20th. No, it's not. It's the 16th today. So let's roll again, shall we? Hi, welcome to the Market Alert for Friday, the 16th of April 2021. So futures reverse overnight weakness yesterday morning and surged to record high. We are probably entering the last stage of the pricing of the growth acceleration, and we see encouraging signs suggesting the reflationary environment can continue and be supportive for risk assets in the near term. Again, something that I mentioned in the Market Alert. Of course, you will be coming out of lockdowns in the US, and you're going to see a surge in economic inflation, that's for sure. So, of course, the market's using this at the moment and moving higher. Einhorn, the market is fractured and in the process of breaking completely. This I wouldn't disagree with. Dr. Michael Burry, famed for his role in The Big Short, reportedly received a visit from the SEC after tweeting warnings about recent market trends and decided to stop publicly speaking truth to power. This is the chap who uncovered what was going on in 2008, took advantage of it, made a lot of money. And of course, he's been tweeting out what's really going on. And of course, when you do things like this and you upset the deep state and the powers that be, then they send the boys round. And so he's ended up deleting his Twitter account. So it just goes to show that he must have been onto something if they're going to go to those sort of lengths. And again, confirmed here or reiterated, emerging cracks in the perfect bull market. One day in the near future, we will look back at this extreme level and wonder why we did not use this as an opportunity to take some risk off the table. If you've got a stock portfolio, you're going to be taking profits off as the market moves to the upside. Unlike the metals markets, which are the only commodity bull markets, well, silver in particular, that hasn't made a new all-time high, the only commodity on the planet that hasn't done this now since 1979 when silver got to $50 an ounce. Everything else is at the extreme on the upside. So in that situation, you'd want to be looking at taking some profits. Meanwhile, the implied volatility is down yesterday from the 1390 to 13.47, and the low that we've got is 36 there. If we can get below this, that would be great as well. And the yields dropped markedly. If we just go over the last 5 days, I can click on the right point there and then just wait for that to disappear. So we can see that Tuesday they were pummeled, and yesterday as well. So interesting, bouncing a bit overnight there, but way off that 170 that we saw earlier in the week. So the yields are up and down at the moment. And in news for today, we just got the prelim UM consumer sentiment. This is out at 3 p.m. for economic news. So a quick look at the Dow, which is vertical. We'll find the chart. I'll get it in a minute. That is the one. And in the daily chart, you can see yesterday moving to the upside, very low volumes. So the market's just being marked up. Let's draw in the new all-time high. So we're now at 34,000. We've got through this psychological level. Bit of weakness overnight there. But again, just look at how many bars are closing above the 5-bar moving average. In fact, once we close above here, we don't even actually close below it again. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, nearly 16 days straight with no close below the 5-bar moving average. Meanwhile, in the German DAX, we've got a different picture. We've still got this sideways move, as we can see here, but looking bullish overnight. At least this low was higher than the previous day's low, but we need to take out the high that we put in on Wednesday, yesterday, today. Yeah, that's it. So Wednesday's high, and through this 62% retracement, which has been a bit of a resistance for the market. And overnight, price is more or less in a 15-point range, as you can see there, below the 200, back above the 200, sitting on the 200, and currently sitting at yesterday's high, according to this. And yet we can see that in the daily chart as well, just to get the confirmation. Need to move up from this level here that I drew in the other day, just to remind myself, is the 78% there, 321. That is still in the chart there, 321, yeah, 316. So just above the R1, you've got the 78% retracement in the daily chart there. So keep an eye on that as well. Meanwhile, in the metals markets, surprise, surprise, I'm slightly worried because I'm not used to prices going up in the silver market. Generally, they are being spoofed to the downside, and I'm still cautious and will be until we can break the $30 per ounce level. I won't be jumping up and down with joy until we can take out this level here, the 30.21, when we had the weekend of the Reddit mob trying to corner, or talking of cornering the silver market. Until that's taken out, then I remain cautious, optimistically cautious, but I still think we could see some sort of shakeout in this market. Never take for granted the up move in the silver market. You only have to go back and look at some of these days when they manage to slam the market down, as you'll see there, you know, $2 or more. So it takes a lot to move to the upside. Doesn't take a lot for them to come in and slam it to the downside. And if you watch the video that I recommended yesterday, you'll see how the 8 banks are currently net short as well in this market. So we are fighting against the tide at the moment. But saying that, we're at 78.89, and there is a possibility that we could move up to this. I'm surprised that we're not actually down on the overnight. Just a quick look at the 5 minutes there. We came down to the DP though from yesterday. We see them buying back in at this area, and yeah, we've got a bit of resistance there that they're trying to tackle, and there. So where's the previous day's high in this market? So we're just up here, so 25.98, so that's $26 there, so that needs to be taken out. Meanwhile, in the dollar, this moving down to 89 yesterday, a bit of a bounce there. Wouldn't be surprised actually if we get a bit of a bounce in the dollar at this level. If we take out 91.25, then we're going to use this low to this high for further fibs, but unless that happens, we'll leave the chart as it is at the moment. And in gold, also moving up quite nicely here as well at the moment, which is nice to see as well. And through the resistance to the left. So what I would be inclined to do here is to use this point here to the low that we've got over here, and from there down to there, and we'll just get rid of those that the market's already gone through, so we can see where prices. There we go. That looks a lot cleaner. And we can see there we've got a set of fibs now to the upside for the gold price. We need to get to the 78, which is 17.85, and then really important level here is the $1,800, major psychological level for the gold market there. So let's have a quick look at what happened yesterday. Yeah, we'll do that. That's how, just making sure I've covered everything. So yesterday, the market moving higher in the futures market up to the DP level. But as we saw in the daily chart from yesterday, the market is stuck in this sideways range. And again, if we go back to the 4-hour chart, you can see how sideways this range is. It's a channel. But it's looking like it could break out, actually. You've got you know, this sort of ascending triangle pattern, which is usually indicative of a move to or a break to the upside. And given what the Dow's doing, I wouldn't bet on the short side, as I would expect the market to even do that during today. So yesterday, I say I'm going to speed through this. Market sitting at the DP. We moved higher initially, and then we can see we've got a lot of selling and a battle going on in the initial part. We had a potential short. Market sits on the 20 bar moving average, which is very interesting. And note the volume in this bar as well, where the market holds at the 20 bar moving average prices. Reverse, we get along. I decided to get out at the scalp as it's been so quiet, and the market then continued to move higher. And the only reason I got out is because there was some selling pressure in the market there, but prices didn't close below the 5 bar moving average, so could have stayed with this quite comfortably, because that's what's been happening in the daily chart. But you can see there prices then just becoming sideways. So I'm going to whistle through this, and there you can see it was just stuck in a range after not even 20 points. Really quiet. And then the afternoon was no different. We had the jobless claims. They were better than forecast. The market moved up, retraced, got back above the 200, and that's where prices kicked off for the afternoon. And look how quiet this was. The Dow had moved higher, but the DAX just didn't follow, and it took until again we had some demand in the market here. Bar was the same size as the previous bar, but volume was greater, and then prices moving up. And speaking of demand bars and supply bars, I'm currently having those written into the software at the moment, so you'll see those over the next few weeks added to the chart, so you'll be able to identify where they are without having to search for them. Again, you can see there's another one here. We've got a supply bar now. The market's got more volume than the previous bar, stuck at the R1 as well. Doesn't mean to say that the market's going to move lower at all, because it can be a breather before the market continues to the upside. It just means that some are taking profits or trying to sell in, or a case of absorbing the selling when it comes into the market as well. But there, the market just sideways after the 4 p.m. cutoff time. Okay, that will do it for this one. We are at the weekend, so have a great weekend, and let's see what happens today. And as ever, thanks for watching. See you in the next one.